Alright, so in this lecture, I'm going to teach you risk management. Now, obviously, I've spoken about risk management in detail in 0 to Alpha 1.0. Obviously, you can go back and watch that in detail if you are not aware of how risk management works. But in this lecture, I really want to talk about some advanced risk management, which if you're part of my Discord community, you must be already aware of. So there's a difference in managing risk and there's a difference in just keeping a stop loss. Okay. So a lot of you guys think that once again, if you're a complete beginner, you don't know what is a stop loss, you don't know how to manage your risk, go to 0 to Alpha 1.0. You have access to both the courses. Go to 0 to Alpha 1.0. I have explained risk management there in much detail. Very simple language. You should need to know what is a stop loss. You should need to know how to do position sizing. You should know what is a lot size, all of these things. Again, that is there in 0 to Alpha 1.0. Again, I don't want to repeat the same thing again and again. So, like I said, there's a difference in managing risk and there's a difference in just putting a stop loss, okay? And a lot of you, what you guys do is you just put a stop loss, okay? So what you think is that, my account size, if it's $100,000, I will just put 2%, and that means my risk is going to be $2,000 per trade. And if I lose, I should lose 2,000. If I win, it should probably mean that I should win more than 4,000, which is a 1:2 risk to reward ratio, right? And also, yes, you also need to know what is a risk to reward ratio. So that is not true. I'll tell you why, and I'm sure you will understand what I am about to say. Don't you think that 90% of the time when you are about to hit your stop loss in a trade, let's say you take a particular trade, it starts going against you and you're about to hit your stop loss, it's halfway there. Don't you think that 90% of the time when that happens, the trade goes ahead and hits your stop loss? 90% of the time when you take a trade and the trade starts moving against you, you go ahead and take your stop loss. That is exactly what happens. Now that's exactly what happens in my system, which is you're gonna see in phase number 2, right? So what I like to do is I like to do active risk management. So there's just putting a stop loss and there's something called as active risk management, which I would urge you guys to do. So what I like to do is I like to cut my positions, and what I'm about to share with you is also going to help you a lot with building confidence with your system and building confidence with your risk management. So what I like to do is, let's say when I take a particular trade, so I trade on 5-minute time frame and 15-minute time frame, right? So I execute my trades mostly on 5-minute time frames. So let's say I put a trade, I placed a trade and I went short, for example. There's a 5-minute bullish candle against me. Now, most of you, what you will do is you will just watch that bullish candle. You know that there's a candle against you. You know that it's going to go and hit your freaking stop loss and then you're going to be sad for the rest of the day. But still, you will not exit that trade. Why? Because you like to hold your winners. You like to hold your losers, right? Even when I want to say the wrong thing, I end up saying the right thing, right? That's how ingrained the right thing should be in your head. Again, that's not the point. The point is that you see that bullish candle against you, but you still watch it go and hit your stop loss. Imagine how much money you would save if you just decide that, you know what, if there's a candle against me, I'm going to cut my position over there. Now again, you might think that there's a chance that it might move against me and then go in my favor without hitting my stop loss. Again, beautiful, perfect. So in that scenario, what I like to do is I like to cut at least half of my position or 80% of my position, because as per my trading strategy, now again, this could be different for your strategy. This could be a different scenario for your trading system. Again, you will learn all of that in phase number 2 on how to build a trading strategy. But most of the time when this happens, the trade goes and hits your stop loss. So what you need to do is you need to actively manage your risk, and that's what I like to do. So whenever there's a candle against me, I cut 50% of my positions or 80% of my positions, because now most of the time when that happens with me, it just goes ahead and takes my stop loss. So this ensures that my actual risk is $2,000, but whenever I lose around $1,500, $1,700, sometimes $1,000, right? And if you're part of my Discord community, you know exactly how I do it, right? By the way, if you're not part of my Discord community, you're missing out on a lot, because I give my trade breakdowns over there where I teach things like this on an active basis, on a daily basis whenever I take a trade. So I would strongly urge you to join my Discord community. It's a one-time payment for a lifetime access. Again, it's a win-win situation. But again, once again, what I was saying is that you should involve active risk management into your trading, and that is going to save you a lot of money. And that also gives me a lot of confidence, because that I know that whenever I'm going to make money, it's going to be more than $4,000, and whenever I'm going to lose money, it's going to be less than $2,000. Not $2,000, less than $2,000, because whenever there's a bullish candle against me, let's say I go short, there's a candle that's against me, it closes against me, I like to cut down my positions. And I also like to aggressively trail my stop loss, because let's say if the price is, let's say again, I go short, and there's a lower high and lower low. If the price is doing that, I like to aggressively trail my stop loss, because if the price is coming back up and breaking structure on the upside, then it probably means it's going to go ahead and take my stop loss. Again, trading is a game of probabilities, and you need to play on the probability. So if a price is moving on the downtrend and it has broken structure and now it's going higher, it has broken the higher low, then it probably means there's a break of structure and the price is going to go ahead and take your stop loss. So why not just cut your position over there, right? And this is something that you need to involve in your trading as a trader, because this is going to save you a lot of money, and this is also going to give you a lot of confidence. Now, why do I like to exit half and not full when I know it's going to take my stop loss? Because again, there's a possibility that it might just go ahead and move in my favor, and I don't want to again regret that I exited half. I could have made a lot of money on that particular trade. So that's one reason. Another reason of exiting half positions and partial positions, once again, you need to realize the importance of this. When you exit partial positions, you are satisfying your urge of exiting. You are satisfying the urge of that particular fear that you're feeling, the feeling that you're feeling. You are addressing that feeling, but at the same time, by being in the position still with a smaller lot size, with a smaller position size, you are also facing that feeling, right? Because if I'm getting fear, let's say I take a trade and the trade is moving against me, right? I am feeling fearful because the price is moving against me. But when I exit half, I feel less fearful. I still feel fearful, but I feel less fearful enough where I can control myself, control my emotions, and still be in that particular trade if it goes in my favor, right? So that way I am facing that. Because if you don't learn to face these emotions and, eventually become immune to these emotions, you will never become successful in trading. That's why you don't need to cut all the positions, because if you cut all the positions, you're basically running away from those emotions, right? You're running away from that position which could hit your potential stop loss. And that's exactly why. First of all, thumb rule is always risk 2% on every single trade. If you're a complete beginner, I would also advise risk 1% of your capital on every particular trade, and not more than that. But let's say you should always risk 2% on every particular trade, if not more, if not less, sorry. And always your goal, because see, we are traders. We don't make money for, taking the right trades. We make money for managing the risk. We make money for losing less and winning more. How do you lose less? You lose less by cutting your losses when required. You cut your losses at the right time. You cut your losses when you feel there's a probability to hit your stop loss. That is what you make money for, because you lose less and you win more, right? You will get a lot more clarity on this on phase number 2 when I talk about building systems, and when you backtest those systems, you're going to get a lot of clarity on that. But your goal from now onwards as a trader is, if you have a $100,000 account, your goal is to never lose $2,000. Your goal should always be to lose less than $2,000, because that means you've cut your position before your actual stop loss. So I always make sure that me as a trader, I never hit my actual stop loss, because if the prices came 80% against me, there's a 90% probability that it will hit my stop loss anyway. So why not just cut it over there, right? So you need to get used to this feeling. Again, this is not the topic for this particular lecture, but I'm still going to speak about it anyway. When you have taken a particular trade, and let's say it goes in your favor, and now you're getting the urge to exit that particular position because you cannot see so much profit in your trading account. Exit 80%, exit half, because if you exit full, you are running away from that feeling of how, oh my God, I'm making so much money, right? So if you don't face that, you will never become a trader who's ready enough, who's prepared to take big profits. And that's exactly why you need to cut half positions, so that you satisfy your fear, address your fear, and at the same time, with the rest of the half position, you face that feeling eventually to become strong enough to face that feeling and trade with a big amount, with a big account size, and make big profits. So this is the difference between normal risk management and active risk management. So from now onwards, I want you to become a trader who manages their risk actively, and always make sure that you lose less than what your actual stop loss is.